Hey guys, Mark McMahon Real Estate. Today I want to talk about the 5 things that are asked most often in real estate investing. I get these questions all the time and I totally get it. I had the same exact questions when I was starting. In fact, on some of these, I still have the same questions. So buckle up, let's get started right away. Number 1, how to get started. Guys, this is the absolute number 1 question I get because obviously most people are just getting started or trying to get started. The question is how, and I'm going to tell you. The way Yuko and I, my wife, got started 12 years ago was we went to a investment club and they were offering a course on how to get houses under contract. What was even more invaluable was the fact that they had contracts and they had ways to get houses and proven methods that they had used to do what they wanted us to do. We ended up getting 2 houses under contract in the first 2 months, so it more than paid for itself. We made $2,000 each on those as a finder's fee. So we spent $2,000, made $4,000, ended up with a $2,000 net income. Not bad getting paid to learn, right guys? So one quick way to get started in real estate is to fast track. Find someone you trust that has some sort of a course or some sort of a method on how to get started and just follow what they did. Then tweak it to match what you like to do. And number 2 is how to find deals. Guys, this is the second most often asked questions. There is no easy button on this one, guys. I cannot tell you, look, if you look here, you'll get a deal. You have to look here, there, and everywhere to find deals. But the most luck we've had over the years has been through MLS. Now, we've had periods of time where cold outreach and cold calling and texting and things like that have worked great. We've had great luck with mailers. Right now, MLS is working, and quite frankly, MLS has always worked if you can master that skill. So I would say if you're just getting started, don't get involved with all the fluff that's out there. You can do that later once you've made some money, but dig into the MLS, get relationships going with agents, and go, go, go. It's going to take you some time to get your first deal. Do not get discouraged. Average about 4 months. All right, so just know that going in. Question number 3 is how to fund deals. That is, in other words, how to pay for the houses once you get them under contract. This is the 3rd most often asked question, and it's a good one because this is probably where most people stumble. It's been said before that if you find the deal, the money will follow. That's kind of true, but not really. You can use hard money, you can use private money, you can save your money and get a bank loan. That's what I suggest you do, but for the most part, the money doesn't find you. You have to go out and find it. So as you're looking for these deals, start poking around and finding ways to fund them. So here it is in order of preference from me. Number 1 is if you've got good credit and you've got money for a down payment, go conventional. Now, you're not going to get as many deals that way because most of the really good deals are cash deals, but you will get the occasional deal. And that might be the only way you can get started. Hard money lenders are the second avenue you can go to. They are a step below banks and a step above private lenders. What they do is they base the loan on the value of the house. So they will lend you 70% of value, plus they'll lend you some money for the rehab sometimes. But they tend to charge higher interest rates and they charge points, which is figure every point is 1% of the sales price. So if you've got a $300,000 house, 1 point would cost you $3,000. Hard money lenders charge anywhere from 1 to 3 points, just for the pleasure of giving you a loan and interest on top of that. So that's one way to get in the game. A lot of people, I would say the majority of investors, use hard money. Find hard money lenders in your area. There are a ton of them out there, and ask other investors in your area who they use, who they trust, and give them a shot. Hard money is not a bad route to go, but it's going to cost you more. The best way to do it is use private money, which is what we do. We have people that don't want to own real estate, but they do want to invest in real estate, and they invest with us, and we buy houses with that money, and we give them a return on their money. And we only use their money when we have a house. Otherwise, the money goes back to them. So we're not paying interest during the slack times. So that is the best way to fund them. So those are the 3 ways to fund them. I'm sure there's 100 million other ways. There's seller financing. There's all kinds of things. But those are the 3 main ones. All right, number 4. All right, Mark, I'm ready to go. I got everything figured out, but I don't know what city to start in. Guys, honestly, the city you're in typically is the best city. Now, if you're in a city where it's the economy is really, really bad and it's houses sit on the market for a long time, or it's sliding, the market is sliding, in other words, going downhill, or let's say you guys have people moving out of town more than you've got moving into town, well, then you might want to move to an area as close as possible that fits the criteria that would be good for an investor. But investing out of the area has a lot of challenges. I know people that live in California and invest in Ohio. And while it's possible and it's very profitable, you do have more issues, more headaches, because you're not there to actually have eyeballs on the job site and to be able to look at properties. So just know that going into it. So my advice is always to start out at home. I live in the Los Angeles area in Orange County, and our market is atrociously expensive and extremely competitive. Everybody comes here. It's like Phoenix. And we have a hard time getting houses, but we still get them. So regardless of whether you're in a competitive area or not, there are still deals out there. So stay close to home to start. Maybe you can spread your wings later on. Wouldn't suggest it, but you can. Number 5, should I get started investing now? Yes, you absolutely should start getting invested now. Here's why. I have bought throughout every upturn and downturn and still done okay. Even if I bought at the height of the market in 2007, I would still be well ahead of where that market was then. Houses in my particular neighborhood were selling in the $750,000 to $800,000 range then, which we thought was absolutely atrocious. They are now selling for $1.2 million. So had I bought in 2007 at the height of the market, I'd still be way ahead. The question is can you hold? Can you hold on? That's what you have to figure out. Can you hold on through thick and thin? It's like the stock market. As long as you're always investing, your investments will always go up. So, is it time to get in now? Why not? It's not going to hurt. The question is, does the property cash flow, and are you getting it for under market value? I am not saying to go out and spend over what the asking price is. I'm not saying to spend above market prices at all. You have to spend well below market. Everything we talked about before this still stands. You still need to get a deal. It still needs to cash flow. And there are those deals out there. So go out and get them, guys. And don't forget to look down below. We've got a webinar coming up this week. 3 things that will help catapult your real estate business. Also, we have a free new investor bundle down below. You can click on that and you will get a bunch of free information that Allie and I have put together, questions that people have asked, lists of how to get started, videos, all kinds of stuff. 100% free, guys. It's just my way of saying thank you for being here. So thank you so much for being here. Please hit that like button, subscribe to our channel, sign up for notifications for Allie's sake, and I'll see you next time.